From the morning reading, stocks have strong gain, bullish engulfing for the SPY and diamonds. All 9 sectors moved higher on Monday. XLE, XLP, and XLU were the strongest sectors, while XLY was again the weakest sector. Breadth strengthened as advancers led decliners 2.69 to 1 on the New York Stock Exchange and 1.56 to 1 on the NASDAQ. Smart money is fleeing the NASDAQ. The latest report on futures traders shows that large commercial traders that use the futures market to hedge have established one of the largest shorts ever on the NASDAQ 100. That's a big change from early September when they were net long for one of the few times in history. This isn't a major indicator, but it is a small warning sign that easy gains may have been had. The VIX fear gauge gave a buy signal on Monday by reversing a recent extreme. Forward returns for stocks were mixed, but it was a consistent precursor to falling volatilities in the days ahead. Monday's reversal in the main ETF tracking crude oil, USO, has preceded several rallies of 20% or more over the next 3 months. Like we discussed in other markets though, one-day rallies are inconsistent, and it is no different for the USO. Short-term follow-through was a good indicator of whether it would be successful. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:51 a.m. Central Time, and I am recording this in preparation for the market day of November the 17th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And as you can see, all 4 of the U.S. broad market indices are up nicely, and this is particularly gratifying after yesterday's big engulfing gain. We'll go to the charts in just a moment here, but bottom line, you have the S&P futures up about 8.5 points, or 0.4%. Russell futures also 0.4, as is the NASDAQ. Dow futures are the strongest, up at the time of this cut about 0.5%. Crude oil down 1.1%. Euro down just a scratch. Bonds also down a scratch. And gold down about 0.5%. In overseas action, China basically scratch. Hong Kong up over 1%. Japan up 1.2%. Germany up almost 2%. That should be a strong precursor for our open if things continue on the current trend. United Kingdom up almost 2% as well. In terms of macroeconomic reports, today we have a pretty good list for the United States, especially for a Tuesday. You have CPI, you have core utilization, industrial production, and some housing data, both mortgage delinquencies as well as the housing market index. So quite a bit actually for a Tuesday. Looking ahead, we also have some more housing information with building permits and housing starts. Also in the market, pre-market, you have FOMC member Lockhart speaking, and then crude oil inventories at its usual Wednesday time slot. Also note that we have FOMC meeting minutes, and this will be very, very important to glean any kind of clues as to the indication of where they are going with the Fed rate and interest rate increases. A couple things to keep in mind there. In terms of volatility, we have, as you would expect, decreasing volatility in the most recent with that bullish engulfing yesterday. Short-term VIX down below a 17. You'll recall it was up over 20 yesterday. Skew also still very elevated, but has definitely ebbed from the level yesterday. It was almost a 140 yesterday. IV percentiles 24 for the S&P, as is the Russell, 18 for the NASDAQ, 27 for the Dow. Those levels are all a little higher than they had been, 4 or 5 days ago, but they're all very, very low, all in the lower quartile pretty much. In terms of standard deviation moves, you did have 3 of the 4 markets with standard deviation moves. And also note this cluster here. Quite a bit of volatility here of late. And indeed, 4 of the last 6 trading days in the S&P have had more than a 1 standard deviation move. Some of this was down, some of it was up like yesterday. Bottom line is that there's quite a bit of volatility in the market of late, and that certainly is something to note with your trading. In terms of, let's go to the graphs, and let's take a look at that action yesterday. Bullish engulfing on the SPY, and SPX is the chart we actually have up here. There are bullish engulfings, and then there's this bullish engulfing. When you have this large a candle, you remember the day before was not a slouchy candle itself. Friday's was a pretty significant candle, plus it came into significant support. And as we talked yesterday, right at this area coming across with the former FOMC wick, had served as resistance, had broken through, served as support, and then served as a support and to stop this big down move that we'd had in recent trading days. That was also this 38 fib retracement. So there was a number of reasons to think that this could be support. And indeed, despite the fears that many had that there could be a significant breakdown Monday morning after the terrorist attacks in Paris, while we did in the overnight dip, and then very shortly after the market opened have a quick dip, the bulls quickly came in with some force. It wasn't just first thing in the morning and then take off. There was something of a little bit of back and forth, but then once it started to move, it pretty much went straight up. And the difference between this low at 2019 on the SPX and the high at 2053, and it closed just literally a couple pennies off of the high, is quite pronounced. And that is a very large body there and a very large bullish engulfing candle. So that means something. So we certainly are thinking that while this was a bit nervous, and especially these last 3 days at the end of last week, the bulls clearly have demonstrated support at this area. Now where we go today, right now, it seems like we're going to continue this pattern, which would probably be the probability bet. At the same time, where do we go? Do we go just simply to chatter between this low and this high, or perhaps this low and the former range highs? Or is this just going to roll back over? So first hypothesis would be an expectation to go back at least to this 2117 area. After that, we'll have to see what kind of momentum and energy the bulls can continue with. In terms of the other indices, also very much bullish engulfing type candles. And the Russell, of course, being relatively weaker. We're still watching for evidence that the small caps can kind of catch up with their larger brethren and become a market leader. NASDAQ also very strong action, though not quite as strong as you would have seen from the S&P. And then you have the Dow, also a bullish engulfing. Now remember what we said from the morning reading about the smart money fleeing the NASDAQ, and then we saw that action where certainly we don't want to discount. This is a big green candle, and it's quite bullish. Did not quite hit the bullish engulfing, but it is certainly a reversal pattern of itself. But again, breadth. We're continuing to keep an eye on breadth, and you're hearing a lot of references in the morning reading and so forth to questionable breadth on these bullish moves, and we continue to be concerned about that. In terms of going back to the daily report, you know what? Just a second here. We'll do it this way. Quick punt. On our daily report, we do still have a number of concerns. It's very, very mixed though. So while I could certainly make a case for a number of areas of weakness, I could also make a case for a number of areas of bullishness. So ultimately we're going to end up in this kind of consolidated opinion of transition. We do seem to be in phase 5. We did have that break, short-term break of diagonal horizontal support. We did have a reversal on that yet, but I still need to see a higher high to be able to have some confidence that we have truly returned back to phase 3. In terms of the IBD status, uptrend under pressure continues. Accumulation distribution score on the S&P is a C. The NASDAQ a C minus. Neither one of those very, very healthy by any means. GMI index improved 1 notch to a 3 out of a 6. That buy signal still is retained. That author remains in cash on that core portfolio, but has started to take some initial small positions. So we'll see where that goes. That sell signal did not happen on Monday, so we can take that away. Primary market condition remains a neutral bear, another area of concern. In terms of the decision points scoreboards, we see mixed signals with short-term signals kind of half and half between bullish and bearish, intermediate in the bulls, and long-term a bit of a mix as well, with some up signals and some down signals. So this is very much where we are. This is what you get when you have neutral bear. You have mixed time frames. You have short term going one way, intermediate term going another, and long term going back the same direction as the short term in this case in many of the setups. So very, very much in transition, and it remains to be seen as to which way this truly breaks out. And we do not have that answer as of yet. Intermediate term market posture is bearish, but still has an upsloped sentiment. So again, very mixed signals. In terms of that intermediate term market posture being bearish, you see all 4 of these did retain that bearish stance even after yesterday's action. Remember, it's an intermediate term signal. The action yesterday was a very strong short-term signal, but not enough yet to turn the intermediate back to bullish. In terms of position sizing opinions, you have on the long side portfolio exposure up to 50%. And then on the active trader opinion, based on volatility, you're still up over 18 on the VIX, so that would call for a 50 to 75%. So both of those opinions are calling for a reduced position size. Now, in terms of kind of core portfolio type positions, this intermediate term market posture being bearish would call for no new short-term or intermediate-term bullish trades. You need to, based on that signal, wait to enter new trades, but continue to manage existing positions. If you're an aggressive trader and you seek to take advantage of these short-term signals, then you might want to consider reduced position size in alignment with this position sizing opinion here. In terms of the overall hedge warning status, it's currently level 1. That is our yellow light. Think of tapping the brakes as you come into the intersection because the car in front of you looks like they're going to slow down. So some elevated risk. This is not a prediction that the market's going to go down or by how far it's going to go down. It's simply saying that there is elevated risk conditions in the market and you should respect that. In terms of volatility-based signals, we still have that market in decline signal flagging, though that short-term volatility to intermediate term status did come off, so that was an improvement yesterday. VIX futures are still up over 18. That's a warning. Distribution day count continues to be high at 6 for the S&P and 5 for the NASDAQ, so that's still an area of concern. Also recall that we've had a cluster in multiple NASDAQ distribution days in recent days clustered together. We had 3 of those actually. Skew remains elevated, still running about a 10% probability of a 2 standard deviation move in the next 30 days. In terms of trend base, you do have this new highs, new lows, with some 400 new lows were actually set yesterday before the bulls came in and took off, and did not establish new highs. So that goes again back to what we've been talking about, where very mixed kind of posture, where you get a lot of new highs at one point, a lot of new lows at one point, but we don't actually seem to gain any real ground. So kind of keep that in mind as you put on your positions. In terms of intermarket risk aversion indicators, we now have 3 as solidly risk off. Again, another warning area. In terms of the special opinions, not a lot of changes from yesterday. We were advising to be relatively defensive yesterday. We would still keep that cast. Ultimately, though, for example, the option income strategies, that VIX is still outside the acceptable window for the initiation of new option income positions for novice traders. More aggressive traders certainly will welcome actually this volatility, but consider reduced position size, or at least strategies that will account for larger than normal delta or vega moves. Remember, we talked about the number of standard deviation moves that had occurred in recent trading days, 4 of the last 6 on the S&P, and those were going both directions. So if you're playing some sort of narrow strategy, such as a rut weekly calendar, you may have found yourself getting whiplash both directions. That's a pretty difficult market. Not to say it can't be done. Those aggressive traders can handle that. Novice traders maybe more than you want. So just kind of take that that opinion and put it into your own conditions. In terms of cover calls and put selling, no real changes since yesterday. Retain that defensiveness, and as we mentioned here, and you can read these lines, take a number of defensive strategy aspects to be able to better account for the current level of risk. In terms of sector specific, we did have a good bit of improvement with yesterday's action, but you notice it's still not all solved. You don't heal the action of the last 2 weeks trading action with one bullish engulfing, though we've had quite a bit more, especially neutral, coming in at the short to intermediate term. Notice the ones that seem to be setting up the quickest. Materials, very interesting, has been doing better of late, so certainly keep an eye on that. Also keep an eye on the ones that have done the worst: transportation, healthcare, and retail. These, healthcare and retail used to be the darlings. They certainly have taken a lot more down attention of late. Now we'll have some big retails coming out with earnings this week, including this morning, so we'll start to see probably more definition around the retail sector on the back of some of those jumbo retail names such as Walmart, Home Depot, and Lowe's. In terms of transportation, note that it's down, and if you're a Dow theory person, the fact that the transportation sector continues to be so weak should be taken as a warning sign. In terms of sector percent change, you see indeed a big day yesterday. Energy up over 3%, telecom up over 2%, even utilities, they continue to see some healing from recent action. We had that big down day in utilities after the employment report of last Friday, but that seems to be getting some improvement now. Okay, that should be enough for today. A little longer than I'd like to be, but certainly not as long as yesterday. Yesterday was just packed full of a lot of changes. In terms of what we do here, if you find it helpful to your trading, the way you can show appreciation and encouragement for us to continue to provide this free market preview in a way that we think is different than many others out there, if you find that helpful to your trading, like us on YouTube, subscribe to the YouTube channel, retweet us to your Twitter followers, to your StockTwit followers. If you have direct commentary, you can send that to support@falconglobaltraders.com. We do have a number of special opportunities available right now. One of the things that are being subscribed in coordination with the Chicago Northwest Burb Trading Club and our friend Nick over there. Go to this website for more details on this self-directed active money management course, multi-week course, lots of very high quality training. Take a look at that and you should find something of interest. Other opportunities, and I'll go quicker through this. This is for the day traders. This is a fantastic tool for day traders. Have all your support and resistance levels and a daily price guide all ready to go. More information at that website. Another opportunity, we'll talk more about this on a different day. Disclaimers as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning for the Falcon Global Market Preview. Good trading.